All right, it looks like we finally got ourselves live here. So you're listening to IBGR, the International Business Growth Radio Network. My name is William Eastman, and whenever you're on the road and you're operating remotely, there are always interesting technical issues that come your way. So today we were just going through a typical set. Now, unlike last week's show, this is our challenge webinar, which is a little bit different. So for those of you that are listening on radio, you need to go to LinkedIn or you need to go to Facebook. Facebook would be IBGR Network, where you can see it live. Um, let's see here. And LinkedIn would be just my LinkedIn page, William Eastman. And either way, you can find us. Now, this is part of our soft launch on going into a more of a video formatting to augment what we already do in text and in audio. All right, so let me put that aside. So the reason that we haven't done a lot of advertising around this is that in the soft launch, what we're doing is we're getting all the technical issues out and we're trying to write a SOP so that when we start publicizing this, you'll go, hey, that was a great broadcast. Now, I am lucky enough not to be sitting in a car like last week inside of a tornado watch and a thunderstorm and off of I-10 in Tallahassee, Florida. Today, I am sitting on the beautiful, of course, you can't see it behind me because I'm indoors, the beautiful Indian River, which is a saltwater lagoon, and I'm on what's known as the Space Coast, which is an area that I grew up in. The Space Coast is basically nothing more than the area around the Kennedy Space Center. Okay, so now let's get going. What are we talking about? Well, if you take a look, if you're at Facebook or you're on LinkedIn, you'll see on my notes what I have as a link for Season 12 Finance Notes. Go ahead and click that. It's going to give you 3 on the page. We're going to go through order. Now, if you're listening to IBGR radio and you're only getting this as an audio broadcast, then what you need to do is you need to go to the website, ibgr.network. IBGR is our call sign. Just like any other radio station, we have a call sign, except ours means something. IBGR.network is our name, our URL, and our broadcast frequency. When you get to the page on the navigation bar all the way to the right, you see resources. Mouse over that. And when you mouse over it, when you see show notes, click it. Now, here's what you need to do because nothing's going to pop up because this is all what's in the queue, what's coming up. If you go down, scroll down the right-hand side, you will see names of authors and hosts, and you'll also see seasons. Go to Season 12 Finance, click it, and then that's where we get to start. Okay, so that should kind of get us all on the same page here. All right, so I'm one of the only 2 people who does not have a studio engineer, so I'm running everything myself today. All right, so what are we doing here? Well, let's talk about the concept behind what we call the challenge show or the challenge webinar, and then let's get into the materials. The idea behind the challenge webinar is that with radio, it's a very passive medium. Most of you know you're in the listening audience. You can listen either live or you can listen to this as a recording, a replay, or as a podcast. And there's not a lot of interaction with the host or the authors. And we got some killer people here at the network, people that you just absolutely want to talk to, people that you probably couldn't afford to hire. And yet they're willing to spend their time with you to help you with your business because everything we do here is dedicated to starting, growing, or exiting a business. So here is a format that we are going to introduce next season, season 13, starting in April, which I'm doing the soft launch right now, is an opportunity for you to say, okay, 2 weeks ago you talked about X, or I was looking at the show notes. I got a question about this. Here's a way to start a 2-way dialogue going on. All right. All right. So that should set the premise for this. Now, let's talk about what we're doing here around winning in difficult times or recession-proofing your business. One of the things that we've been working on here at IBGR since we did our forecast last June of 2021, we forecasted it by the 3rd quarter of this year, the United States would be in a recession, and more than likely the rest of the world. And that, you can, depending upon what industry you're in, that is currently true. In other industries, you seem to be doing all right, but doesn't change anything because this is absolutely the most difficult thing for small business owners to get through, and who usually takes it in the neck in a recession is the business owner. So we came up with a design that just simply said, okay, if you're going to get through a recession, and by the way, we know something about that because this is my 5th recession for these in business. So it's not like we don't know what to do here. And you could find some literature out there that would probably tell you what to do. But here's the bottom line. And then the bottom line is this, is that you got to be you've got to be on top of your numbers like you've never been on top of your numbers before, because what you're looking at is an environment where, um, one, revenue is going to be harder to get. You're probably not going to be able to get as much, and it's going to cost you more to get it. Two, the cost of things are going to go up in an inflationary period. So you get the double whammy of having less money coming in while it's more expensive to operate. So we designed three tracks to help you with that. The Monday track, which we're doing today, and that is owning your numbers. You've got to be intimate with your numbers in ways that you may not have been in the past. So you know exactly what are cost drivers and profit drivers within your organization so you can go to work with them. All right. Now that's track one. That happens on Mondays. Next week, we're going to do another show around it. And it's not going to be live like this. Oh, it's going to be live, but it's not going to be on this video format. Well, that's fine. You know your numbers. All right. So I know that. What do I do? So on Tuesdays, on our operation day, our track there is how to become the lowest cost producer. And our focus on that is cost, cost, cost. Okay, if I know my numbers, how do I bring my costs down so that I don't need as much revenue as I would in normal times? And so next Tuesday, I'll be doing this live there. And then what we have on Wednesday is on the revenue side is what we call holding your best accounts. And what we know is the acquisition of new accounts in a recession, exceedingly difficult and much more expensive. And more than likely, these people, unless you're servicing a very high end income type individuals, what most people are going to be doing are going to be looking to buy your cheapest offer, which has the least margin possible on it. Okay. So that's the world, unfortunately, for me and the rest of us. That is the world that we all operate on or operate within. And so what we did is we created these three tracks with these specific goal of each one of these tracks of helping you know your numbers. Okay, now I know where my cost issues are. Then how do I take down my cost issues? And then on a Wednesday, how do I then talk about how do I look at and what do I do about holding my best accounts, which we did last Wednesday. All right, so now that should give you all the preamble you need. I need you to go to show notes. And if you haven't done that yet, IBGR.network, IBGR.network. When you get there, go to resources, mouse over, go to show notes. And then on show notes on the right hand side, you'll see archives. And then you'll see categories. Go down to season 12 finance and click it. Now, if you're listening or watching on Facebook or LinkedIn, that link is right in there. And what I want you to do is I want you to go all the way to the bottom of the three, and that's owning your numbers, the basics of financial reporting. And this is season 12, S12, in episodes 1 through 4. So these are 4 podcasts available to you. Now, what we did here is we basically said, all right, what can we assume the business owners know and don't know? All right, and that's always a touchy subject, because if we're getting into something like this, um, we don't want to insult people, but we don't want to start too high. So we went, okay, let's start with our basics, and let's assume that most business owners understand what reports to read. But let's make sure of that and emphasize the areas that we want to talk about. So what we did here in this first one, and if you want to click S12E 1 through 4 and click that, that header will then take you into the whole document. The idea behind this is that there are multiple reports, standard reports you can get from any financial accounting software. All right, so that's pretty simple to do. There's also custom reports that you can build, and later on we can have a conversation on this probably in our next next Monday track, which would be in 3 weeks if you want to talk about it. 3 weeks from now we'll be back here online. But pretty much, you can deduce everything you need to know in a business by understanding 3 documents. All right. You got the balance sheet or the balance statement, depending upon where you live and what to call it. And that is your Polaroid, your snapshot of monthly activity. So you close out the books at the end of the month, and you can say, okay, let's look at October 31st, November 30th, December 31st, and pretty soon, January 31st. And what it says is, okay, at that point in time, this is where you are, or this is where you were. All right. Now, it's good to tell you kind of trending how the business is going. The challenge you have with the balance sheet or the balance statement is it's nothing more than that. You can't deduce anything from that. You can't go, okay, we had more cost and we had less revenue coming in, therefore we made less money, or maybe we operated in the red in December. But when you go, well, why did that happen? You're challenged. So then the next sheet is the income statement, or better known as profit and loss, is that looks at the performance between October and November, or looks at the performance between November, December, etc. You get where I'm going with that, and it begins to tell you what happened with assets, with revenue coming in, what happened with deficits, what happened with liabilities, what things were you spending money on that perhaps you shouldn't be, and it gives you a better indication of where the business is going. Now, most people, most business owners are good at two. There's one more that I heartily recommend, and it's either the cash flow statement or it's the sources and uses of cash, depending upon how you want to go. Because one of the problems with the profit and loss, it takes into account things like amortization and tax and things of those natures that, though those give you an accurate picture of the business, what they don't do is they do not get at the real core of what's going on. So when you're looking at that uh, sources and uses of cash, you can see exactly where it's going. Okay, what I need to do is I need to get out because we're about to go to break. So you're listening to IBGR, the International Business Growth Radio Network. My name is William Eastman, host for our today's show. This is our webinar Challenger series, and this is part of Winning in Difficult Times, and this is track one, Owning Your Numbers. Don't go anywhere. We will be right back. All right, let's see here. And we're back. You're listening to IBGR, the International Business Growth Radio Network. My name is William Eastman, and this is part of our soft launch of a new feature that we're going to be highlighting next season, season 13, starting in April. Okay. And what are we doing today? Well, we're doing kind of a radio show, which is a review of the last three shows we've done in the finance track, specifically about how do you win in difficult times by knowing your numbers. And that's really been our focus here. And so this is our second segment. And what we'll do here is we'll pick up the conversation. Now, in order to get involved, a couple things you can do. If you, obviously, if you're already on LinkedIn and Facebook, you already know this. But if you're not on LinkedIn and Facebook, William Eastman, go to my personal LinkedIn page and see it there. And then also on Facebook, that is our business page on ibgr.network. Either way, you can see the simulcast. We have it a couple of other places, but I'm not going to announce that yet because we haven't got all the bugs out of everything. And that's why you always do soft launches before you start advertising. Now, in order, no matter how you're getting at this, what you need to do is you need to be looking at the show notes. So you need to go to IBGR IBGR.network, our name, our URL, and our broadcast frequency. When you get there, go to resources on the navigation bar all the way to the right. Mouse over that, then you'll see show notes. Click it. And when you get your show notes, you got one more thing to do. You scroll down on the right hand side, you see categories. Go to season 12 finance. And what we are doing is we are doing the first one, and you'll come there and you'll see 3 show notes there. S12 E1 through 4, which is the one we were doing, and signifying season 12, episodes 1 through 4, and then above that we have a couple others. And what I was doing is I was just finishing up this one here, and that really not understanding your cash flow is absolutely a killer in bad economic times. So the premise we're operating from, number one, is there will be a recession. Now everybody's going to be affected differently, but if recessions are very harmful to small business owners, to wit you. And so that's number one. Number two is then, are there any formulas or strategies or tactics that work to help small business owners get through this? And the answer is yes. And that's the 3 tracks that we put together: one to finance, one to operations, and one to customers, or marketing and sales, customer service. Number 3, a question you don't get asked very often, but you should be, is that, can I come out of this? Is there a way to come out of this stronger than what I went in? And that's exactly what we're doing here. All right, so let me finish up with season 12 E1 through 4 by saying we covered the 3 basic reporting statements that you're going to get from your accountant. And if your accountant can't help you, fire your accountant. All right, so then what we did is 2 weeks ago, then we went into season 12, episodes 25 to 28 of owning your numbers. So it's all the track. And now this is, once you own the numbers, the thing you got to get on top of is break even. All right, so if you go ahead and click that one, and we'll talk about break even a little bit and take most of time right now. Now, on the other hand, if you want to jump in and add any comments, Facebook or LinkedIn, we're there and we're ready to rock. Okay. Of course, so I'm slow, but I'll be there nevertheless. All right. So here we go. So this one, I put in some stats to kind of open this up, and that is 20% of all startups fail in the first year. I'm sure you've heard that number. 50% fail in 5, and 33% fail after 10 years. Now, so if you have 100 and that's 20%, then in 5 years you only have 80 left. 50% of 80 is 40, and 1/3 of 40 would be what? About 13. So 100 companies start at best. There's 26 companies left standing at the end of that period of time, unless my math is bad. And I think that's pretty much true. In fact, that may be optimistic. Now, if you look at these show notes, each one of these have a podcast hooked to it, so you can listen to me go through the details a lot more than I'm doing right here. But the issue with break even, and the thing that I want you to consider, you have 2 problems in business when it comes to cash or cash flow, and that is when and how much. All right. And I'm somebody who believes that, though how much you're getting is critical because it tells you whether you pay the bills, the thing that frustrates me the most today and every other small business that I've run or been in is when. In other words, I can have somebody slow pay me where they don't pay me the entire amount and I can take it in installments as they have the money. I can live with that if, in fact, I know what day that money is becoming available, because what I can do now is I can plan around it. So I can shift some spending. Perhaps I don't pay something on the day I should, and I let it slip 2 or 3 days, and then I'll get that payment and I'll cover it. But if you don't know when money is going to come in, meaning recognize, I'll put it in accounting terms, that you can recognize the money and how much is coming in, then you really can't manage cash flow. And so what this talked about, and this whole segment was on how to do your own spreadsheet. Now, you can get other programs to do this for you, but I found a very helpful lesson is that if you're not intimate to your numbers, build a spreadsheet of what's going on in the company, and you will become intimate, very, very intimate with it. So the big thing here was, what I want to take a look at is I want to take a look at some formulas. And so, for example, in episode 26, what we did is we talked about product formula. Now, this product or service, we're just using the word product. It means you got to make something to sell somebody. A different way of looking at it is, this is your This is your variable cost. Okay. Now, the big thing with this is you're trying to determine where your break even point is. In other words, where is break even based upon what we make? Because the assumption is if you make it, you sold it. You don't have a large finished goods inventory, a large inventory of things sitting around. And of course, that actually does with people. When you think about selling services, it's not raw materials sitting around; it's people, and those are labor costs that you're absorbing. So, unit break even is pretty simple. Total fixed cost, all the costs required to do that over price per unit. All right, total variable cost. And those are really the two key terms in any financial. Variable cost are what it costs you to make something, fixed cost are everything else that you have to pay. Like the rent on the building is not determined by how many customers or how much revenue you have coming in the month. It's all determined by every month you got to pay X. That's a fixed cost. So what I need to get on top of, on the other hand, is how many of something do we have to make and sell, or how many in the case of products. In the case of services, how many hours do we have to sell in order to get the break even? All right. So this just breaks it down to say, okay, total fixed cost. All right. So how do I get the total fixed cost? It's the sum of all non-variable costs, rent, leases, utilities, the price per unit. Okay, total revenue from sales based and divided by the number of units produced. So if you're making widgets and you made $1,000 and you produce 10, the math is pretty easy to determine. If you made $10,000 and you sold 100 hours, then you got the unit cost there. And then the total variable cost looks at all the processes required to produce the service or the product. Now, one of the things that we do on Tuesdays, we get into what's called activity based costing. And we take fixed and variable costs and break it down. So we just made this division is that there's some things related to finance that are financially based, but really fit better either into customer service or into operations. And so make sure you do not miss any of our shows in season 12 in operations on activity based costing, because you can't do this if you can't activity based cost. And if you're saying, well, what does that mean? What does ABC mean? Okay. What that means is that the accounting system that you're using right now would say QuickBooks or whoever using, we're using Zero, XERO, but it doesn't matter. They are all basically financial accounting systems that are designed for banking, for the IRS, etc. Managerial accounting system is something that is set up. This is where it gets us into activity-based costing. Is something that's set up to take each step of a process and fully burden it with its cost. In other words, in a normal setting, and this happens all the time, well, back in the day when I was doing this, is I would look at a business owner and would say to them, as we were having a conversation about cash flow and where is their break even, I would simply say, well, who are your most profitable customers? And they can't. And not because they're dumb, it's because the accounting systems don't work in that way. Now, you can tell me which customer produces the most revenue over a period of time, but you would also have to be able to say, and they are the cost of service in this account, not only the cost of making whatever it is that we sold, but also all the servicing that goes around that. So activity-based costing gives you the ability to get all of the um, variable and fixed cost picture very clear, and it gives you a way of attacking them. So when you work these formulas out, those numbers have actually been teased pretty hard. All right, when we come back from the break, we're going to be talking quickly about I can do this for products and services. I can also do this for product or service lines, because the big thing about a recession is that you're going to need to collapse what you sell. You don't need to sell more things. You need to sell fewer things, but fewer things that are going to match the situation. Okay, so with that, you listen to IBGR, the International Business Growth Radio Network. My name is William Eastman, our host for today's show. Today's show is on our webinar series, taking a look at finance and giving you opportunity to ask some questions about knowing your numbers. So don't go there. We will be right back. All right, so for all you on LinkedIn and Facebook, this is not typically what happens between takes over at the radio station. There's more activity going on here. I am isolated and I'm my own. What would I say? I'm on my own studio engine. I'm managing all of it. That's one of those is why I said, typically you have music on here. But today you don't have music. Well, the reason I don't have music is I just didn't want to try to. I didn't want to try to run the music as well. All right. So what you got there is that just the bumper music as we're going into the next hour. Well, it should be starting right now. Hmm. Looks like I might have gotten off too soon. It's interesting. I'm going to stop using a stopwatch timing. The clock. Yeah, we'll use that from this point forward. And I'm trying to make the breaks right on time. And so really, running a radio station where you got live people or you've got replays, recordings, is that the big thing is that you get exactly the right amount of time and people are on and off so that the commercials run at the right time. Because if you got a sponsor, like if one of you bought time on the network, you would want to know the whole thing ran and it ran when it was supposed to run because that's part of what you purchased. All right, so let's go in here. I've got 129 here on these codes. So anyway, you get to watches make sausage, but let's get away from that. The big thing here, and I'm going to keep this on until we hit 30 to make sure that it picks up. The big thing here for everybody is there's the issue of the challenge you have with radio and or podcasts. Anything that's there we go. All right, so we'll take that off and we'll work from here from this point forward. Um, No, the issue is that it's such a passive medium, and if you're listening to music, that's fine. If you listen to the political discourse, that's fine. But if you're listening and you're trying to find solutions to problems you have in your business, you can't wait for one of us to say the magic word. And you go, that's it, I got it. Because hell, I don't know what the magic word is. None of us around here know what the magic word is. What we do know is we're all professional business people. Everybody that's on the air here, there are two criteria. They know the topic they're talking about, number one, and number two, they're currently running a business. And so, they're living through this just like you are. They're trying to figure out how to get through the recession, et cetera. So that's the dynamic that we have going on here. Um, let's see here. What else I can tell you? And so the idea behind the video piece is to kind of move you from passive to active. Now, if you're looking at this later on LinkedIn or on Facebook, let's get involved. Now on LinkedIn, we have a group that you can join, and on Facebook, we have in a group. And I want to talk about the LinkedIn one. If you're not a LinkedIn player, you really need to be because unless all your sales are to consumers, the majority of your customers are on LinkedIn. That's just kind of the reality of social media platforms. So we have the IBGR growth community, which would be a great place for you to join because then we can start a dialogue. But yeah, we're trying to figure out how to move from passive. All right, we'll just turn that off for a second. We're trying to figure out how to move from a passive medium to an active medium so that we start interacting with you because there's so many things that we've got in our database that we could talk about with you, but we're forced to do generic things. We're forced to do general things. In other words, the vast majority of people have these issues. Not it's nothing select going. Oh, this is a select population. All right, here we go. So we're going to start back up. And so by moving this from passive to active, that's the goal. All right, here we are. And we're back. You're listening to IBGR, the International Business Growth Radio Network. My name is William Eastman, and this is a special day today on Monday. This is part of our challenge webinar series. And what we do once a week is we take one of the shows that are dedicated to winning in difficult times. That's helping you get through the recession you're in or the one that's about to hit you. And on Mondays, we talk finance. On Tuesday, we talk about operations. On Wednesday, we talk about customers. Today is Monday, so we're talking about finance and specifically owning your numbers because the only way this is going to work is for you to become absolutely intimate with all your numbers and know how they work. All right. So let's leave it at that. Now, where you need to be, if you're on LinkedIn or Facebook and you're watching this, unfortunately for you, you're watching me on video, you'll see the link that's right there in the comments. Click it. That'll take you to the show notes. For those of you who are listening on radio, Just go to IBGR.network. IBGR is our call sign, is a radio station. IBGR.network is our name. It is our URL, and it is our broadcast frequency. When you get there, you'll see the navigation bar. Go to resources all the way to the right. Mouse over. You'll see show notes. Click it. Now, unfortunately, you got one more thing to do. Once you click it, you get into show notes. I'm going to give you a side here. You'll see a search bar there. There are over 5,000 pages of show notes. So I don't know what topic you would want to hear about that's related to starting, growing, exiting a business. You do a search, you're going to get more there than you can ever find. And the difference between us and Google and Bing and Yahoo and the rest is none of that is clickbait. Now, what I want you to do is go down below the categories. You'll see season 12. Okay. Season 12 finance, click that. And what it'll do is it'll pop up 3 different shows. These are the notes that I curated for you to look at. So at the bottom of the list, you'll find S12E1 through 4. That's season 12, episodes 1 through 4, the basics of financial reporting, which we did in the first segment. The second segment, which we just finished, that's S12, season 12, episode 25 through 28. And that's corresponding to podcasts. So you can read these show notes and go back and look at the podcast. Now, where we left this off was on season 12, 25 through 28 episode. Now, if you click and open that, that'll take you now into the body of the text. These are about 300 to 400 words long. Roughly, when we get done with this, we have about a 40-page ebook. And by the way, if any of you are thinking about becoming a host, here's something to consider. We at IBGR, we basically provide 2 types of services: one to the business owner and one to the host. To the business owner, you're a consulting firm. I mean, you think about it, you don't have to spend any money. You download the listener guide. Once you look at the listener guide, you figure out what shows you want to listen to or what host you want to listen to. And you can pick up anything you need to know to start, grow, or exit your business, including how to get through the recession. So that's the service that we're providing there. But for the host, it's a little bit different because we are a marketing agency. And so if you want to build your business, you can build your business on IBGR. That's what we do for a living. And so what happens, you become professional on your podcasting, you become professional on your radio show. Your show notes are then converted into an ebook. So you could easily, like myself, I produce an ebook every 3 months. Now, I'm not selling them right now because I have a different purpose for them, but you easily, every quarter, for a year, you could produce a book for sale if that's what you want to do. And we've just partnered up, and we're going to bring a video, which we're testing right now, to that. So imagine you learn you build your business on IBGR. And how do you do that? By getting presence around the world, 183 countries. Okay. You get that by having killer podcasts, killer radio shows, killer video, killer books, or written text. All right. All right, now, so we're down here to service formula by hours. That's episode 28. Okay, so this one is a little bit more difficult, but for those of you in the service businesses, these are a little bit more difficult anyway, because if you think about it, and let's go to inventory, just as an example, I'm going to highlight here, is that inventory and production is raw materials that you put on the shelf to hopefully you're going to use quickly, all right, to make whatever it is that you're going to provide. Well, now, what does that look like for service? And service is really an issue of idle hours. And so think of it this way. What is your ability to sell last week? That's not a trick question. If in fact you didn't sell your consulting or coaching hours or whatever hours that you have available from your people that are working for you that you're paying to provide service to customers, and you didn't sell any of those hours, what's the chance of you running a half price sale this week? Well, of course, you know what the answer to that is. That's ridiculous. Of course you can't. And so the deal with hours is materials are not as perishable as time is. Time is totally perishable because when it's gone by, it has gone by. And so here we talked about, how do I come up with my break-even formula? For hours, to know just how many hours I have to be selling if I've got people working for me that For example, I've had nothing but consulting companies, all my startups. The issue then becomes is what's their utilization rate? What is that? What percentage of the month do they sell? And what's the average fee day? That's it. That's the nature of the game. But I also have to understand is that those have to be sold weeks, if not months in advance, because if I got a consultant that is not working next week, I can guarantee you they're not working next week because there is no way on God's good earth I'm going to be able to book those days. So there's the formula for service hours. I want you to consider that and treat hours like parts. And that may help you out a considerable amount. Now, here's where we're going to go next. I want you to go up and go up to the last show that we did. And this is episode 12. And this had, season 12. And this was episode 61 through 64, Owning Your Numbers. And this is the cash conversion cycle. So what we're leading to, it was kind of this. This was the one where, all right, you know what to read in terms of reports, and you understand, okay, how to establish break even. All right, so now you got everything in place. This one was about the cash conversion cycle. And I opened up the first episode with this, and I'm going to again, is that in business, my experience with this, yours could be different, but the two most important questions I want to ask about my cash conversion cycle is one, when am I getting it? And two is what am I getting? Those are absolutely essential. And to me, when I'm receiving it is more important than how much, because if I know I'm getting, let's say somebody says, I can only give you half, 50% on this date, but that's date certain, I know I can account for that money and I can apply it. So the deal is when somebody consistently puts you off and says, well, I'll pay you next week, that doesn't fly. I want a date certain. I'll give you a deal on what you owe me. You get no deal on trying to avoid telling me when you're going to pay me. Okay. And so here, and a couple of do you knows that the number one reason the small businesses fail is cash flow. That's the number one reason. Okay. And number two is that 40% of startups have insufficient capital to survive the first year. Now, what does that mean? That means that if I don't have sales coming in within the first year, I'm not going to make it. Now, it doesn't mean I have to be selling tomorrow, but it also means that sales better be pretty quick. And then there's a couple factors in there. What does your break even tell you in terms of how long you can go? And then the other issue is that what is your sales cycle? In the consulting industry, the sales cycle is around 3 months. In other words, if you need to close a deal next month and you don't have anything in the pipeline, good luck, because the odds are not with you that you're going to be able to do that. All right, so what you want to do, and this kind of goes back to you can use you can build a cash flow spreadsheet by using sources and uses of cash. And in fact, you can get that turned into a spreadsheet so you can start manipulating it. But what you want to do is basically get a handle on when cash is coming in, because the critical, again, I'm going to say it again and again, predictability is really more important than amount. It really is. Okay. And then so you want to predict when it's coming in so that you can also forecast when it's going out. And then is there a hole? Because a lot of times what happens to us is that we wind up with a hole between when it goes in and when it comes out. And I'm going to talk about that on the last segment. So what I got here is that you do the money in, the money out. That's your sales forecast for the most part. So you got a sales forecast and you got a production forecast. This is why it's critical. It's really critical to have a sharp person managing sales, because you don't need a BS sales forecast. Because there's a tendency for salespeople, not that we don't all do this, but there's a tendency for salespeople to kind of go, well, we can close this and this and this. And they usually are a bit more optimistic. What I want right now, I don't want the most pessimistic sales forecast. What do I want? The most accurate. In other words, if the sales manager's life depended on the forecast, in other words, that amount of money is going to come in on the dates that it's supposed to come in, what would be the forecast? And that's what I would want for sales, because then it tells me what I got coming in. Now, there may be other sources of cash, but right now for most small businesses, that's not true. Then I have my production forecast. So we've already kind of done that, okay, in earlier terms, is that we've looked at that process and where is it break even. But now I want to take a look at, okay, if we start building this today, when is it that we're going to have to sell it? Because in the period of time, let's say it takes you 2 weeks to make it, you got to make payroll for that. You got to pay for the materials, and then maybe it sits in finished goods. And if you run into kind of you're selling through a retail operation, then how long does it sit on the floor? I mean, you're talking about you could be out of money for 6 months on that. Do you have the cash flow to manage that 6 months? So when I do a sales forecast and production forecast, I now have enough information that I can do the sales forecast. And I'll say it one more time before we move on, is that it's the revenue recognition that is absolutely critical. Okay. When is it coming in and how much am I going to get? And that is what I really need. And of course, I can use things like the average, I can use accounts receivable aging report, which is the average amount of time. Okay. I'm going to leave it there because I know I'm coming up onto a break. So you're listening to IBGR, the International Business Growth Radio Network. My name is William Eastman, and what are we doing? We're doing a kind of a hybrid webinar series here, going over going over shows that we've done, and so helping you having a medium where you can talk to us. So don't go anywhere. We'll be right back. Yep, I got a short break. So it looks like I'm a little gun shy there. So it looks like I missed that by. That should stop right now. There we are. All right, David Wilson. All right, so all you there on LinkedIn or Facebook, hey, pop in some questions. All right, I'd be more than happy to talk to anybody right now about what is going on or some challenges. I mean, none of us here report that we are the absolute experts at anything. We're just business people who are pretty damn good at what we're doing. Otherwise, we wouldn't have successful businesses under our belt, and we certainly would not be. We certainly would not be here on this network. And so, as we got a couple minutes here before we come up to the next startup, and then by the way, this will be our last episode of Break. And what I'm going to do is I'm going to show you a spreadsheet that I put together, and it is, it's not fully comprehensive because then if you've ever tried to do an audio around numbers, good luck with that. And so what we did is I put together a spreadsheet that's reasonably self-evident as you go through it. And the big issue is that when money goes out and when money comes in is the critical issues that you got to get a handle on. You got to be able to peg that to say, okay, I get these payments here, these payments here, these payments here, and I make these payments on this date, this date, this date. And it could be that once you've done this, I've done this in the past, is I've gone back to my suppliers and renegotiated payment dates and simply said, look, your payment dates are coming in at exactly the wrong time. If we can postpone them for 2 weeks, I'm not asking for anything other than I know where my cash flow is going to be in 2 weeks. And so therefore, I'll be in good shape. Can we do that? And again, you're talking to suppliers. And so what you're saying to your suppliers is that just help me pay you on time at 100% of what we owe. And I don't know too many suppliers. I mean, if you're talking to me like that, and we're having that conversation, I'm like, yeah, yeah, I really like you. Can we date? Okay, so here we go. And let me see where we are in time. I think that's how my cue to come back in. All right, so if we get a little double speak here, uh, don't get too concerned. I've got to shut this off. All right. So we're back. You're listening to IBGR, the International Business Growth Radio Network. My name is William Eastman. Yeah, I'm looking at the camera for a change. And camera, this is a radio station. What am I doing on the camera? Well, we're experimenting. We're doing a soft launch of a video-based service for our hosts to where now they can spread on all the other video platforms. That's one for the host. The other reason that we're doing it is for all of you in the audience because um, it's fun to be passive. In other words, you get to sit there and listen in and occasionally take notes or download the notes that are up there. But really, if you're going to be successful as a business owner, you're going to have to get more actively involved. And we're offering that that avenue to you to get you more involved. So we're doing these videos presentations. Okay, so here's what I need you to do. If you're on LinkedIn or Facebook and you're there now on LinkedIn, it's my personal page, William Eastman. If you're on Facebook, it is our company page, IBGR.network. Uh, if you're going there, then you already have access to the show notes. However, if you're listening strictly in audio, here's what you need to do. You need to go to IBGR.network. IBGR is a call sign. .network is our name. And it's also our broadcast frequency and our URL. So when you get there, when you get to the website, you'll see resources all the way to the right. Go ahead and click that. And then as that opens, mouse it. And then when you see show notes, click that. And you got one more step. Unfortunately, when you get to show notes, what you want to do is that you want to go down into categories where it says season 12 finance. Click that. And then these 3 shows are opened. And these are the topic areas that I'm working from. All right. So if you're there, what you should be looking at the top of the queue is S12, and that's season 12, episode 61 to 64. Owning Your Numbers is the name of the track. The Cash Conversion Cycle is the name of the session. And if you scroll on down, and what I want you to do is, even though we are not there, are we there? No, we're not there. Scroll on down to episode 62. And so here I broke down everything that you need to put together your forecast. You start with the sales forecast, which is the money in. Then you go to the production forecast, which is the money out. All right. And then what you do is you basically set up your cash flow recognition. And as I said earlier, my recommendation is that you build your own spreadsheet on this, because it'll teach you the numbers in a way that I don't think reading it will work. I guess you could get QuickBooks to give you something, and then you scenario plan around it. But I think I found this more helpful, that I understood my numbers better. And so what you're doing here is you're simply building it out to say, well, what is going to happen if? All right. So let's go a little bit further. So you go past episode 63. Da, 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 da. And then at the bottom, you see episode 64, and underneath you see example spreadsheet. Click that. And that's where I kind of want to end the conversation. All right. So that'll take you to some show notes I did a while ago. And it's a function particular program that does not like to build tables. So if you try to copy tables, you get this. So scroll down. In this particular case, you'll see episode 84. Yeah, it doesn't matter. This is way back. And what I did here is I built a spreadsheet. It's pretty simple, of what's going on. All right. So what I did is I took accounts receivable and accounts payable and said, okay, cash in, receivable, money out, payable. Now, the reality is there's more to it than that, but let it go. So that gave me a subtotal. So what I wanted to do is on accounts receivable, and that's why I've been harping on this, is that knowing when is more important than knowing how much, because the when allows me to say, since most of us operate in 30, 60, 90, or 120 20-day cycles because of our vendors, our banks, etc., is that let's block this up. So, for example, on accounts receivable, we know that within 30 days we'll collect $50,000, and 60 days we'll collect another 10,000, and 90 days we'll collect 15, 120 days we'll collect 15. Now that's a total of $90,000. All right. Now on accounts payable, we got to pay out 40,000 in the first month in 30 days, and in 60 days we got to pay out 35,000. So if you looked at this just kind of a standard, and you said, okay, on the accounts receivable side, we have 90 coming in. On accounts payable, we have 75 going out. Well, what does that mean? That means we got $15,000 left. Well, yeah, kind of at the end of the period, but look at what happens here. If we go a little bit further and we look at the subtotal, so in 30 days, 50 is in, 40 is out. We got 10,000 left over. Okay. Now here's what I put in fixed cost. And so, okay, I have fixed costs running the business. So I have 10,000 left over. I have fixed cost of 3,000 a month. So that leaves me with a net of $7,000 on the first 30 days. Now the COH represents cash on hand. In other words, how much money did I carry over? All right. So I carried over $5,000. All right. So things look rosy. Well, what happens at 60 days? All right, I only had 10,000 coming in. I have 35,000 going out. So that is a loss of 25,000. I have net fixed costs through 3,000. So now I'm at what? I'm at, basically I'm at a loss of um, of 28,000 there. And so as you look at what happens to the numbers, even though, I look at 120 days and I have $15,000 left over, by month 2, I'm in the hole. Now, the good news is I have a line of credit. So I pull out of the line of credit to get me by. And part of what we were talking about here is that a lot of business owners are opposed to credit. I'm one of them. But a line of credit is absolutely essential because this is what it's used for. When you have what we would call episodic cash flow. In other words, your sales are it's not consistent. You have seasons. Then how do you account for the bad seasons? And if you say, well, we'll save all the money from the good seasons, my experience with that doesn't work well. And what happens, either one thing is you don't, there's two things there. One is you don't estimate it correctly and you run out of money. Or number two, you get so conservative, you don't spend any money, and then you lose the ability to have that capital work for you. So you can see in this particular example that these people really are not cash flow positive again until 90 days. All right. Until 90 days, and they haven't paid off their line of credit yet. So this in this particular example, it's going to take you about 120 days to get through this to be back and balanced. And this is the type of stuff that you need to know because then you can adjust what you're doing on the receivable side. One of the things that we talked about in the customer side on Wednesdays as well here on Mondays is the issue of factoring. And so if you've got customers who are traditionally 45 days and they're late, and you've got an enforceable contract that you can use in court, you can then take that you can take the contract, the document saying they're going to pay you, and go to a factoring organization, and they will pay you within 24 hours of what's owed, and you get about 92 cents on the dollar, and then they'll pay you the rest, or not the rest. They'll take 4 or 5% themselves when they collect from the other people, but you're not running a bank. And you got to think you got to look at is anytime that you're owed money beyond 30 days, that is a loan. And unless you're a bank, that is not the business that you are in, at least the last time I checked. All right. So this is just a real simple one. It's easy to work through. You can see how the numbers flow. And so I just wanted to offer that to you to say, all right, this is what you're looking to do. And if this wasn't our company, but if this was my company, I would be making sure that my line of credit is good because I'm going to need it for the next 3 months. And otherwise, we're not going to get through this. All right. So let me talk about what's going to happen next week. So let's talk about what next week's show is. It's the kind of here standard stuff in terms of it's going to be an audio broadcast with a podcast. But what we'll be talking about on the finance side now that we've got break even established, and so we've got place. Where do we go next? All right. So as soon as my computer decides, and again, this is why it's always great to have a studio engineer. Here we are. Oh, come on! It's always good to have a studio engineer because you got pull that file up, put it on my screen. In that case, I yelled at myself and I pulled the file up and I put it on my screen. It feels like the Wizard of Oz, when you get the witch kind of. These little slow internet connections. All right, one of these days. Isn't that a song? All right. All right, here we go. Let's open this one up. And I'll tell you what's up for next week because we got about 2.5 minutes left in this show. And I appreciate any comments that have been put up. Yeah, thank you very much. Also, you can put comments on the webpage. So where we are going next week is we're going to be talking about just-in-time and inventory. And what's going to be significant about that is I'm actually going to break some virgin ground with it. And what I mean by virgin ground is that we're going to be talking about how to look at sales hours as inventory and treat it the same way. Now, you can't use the principles first out, last first out, or what's the others? First in, last out, and last in, first out. And there's different ways to account for inventory. But the deal is that if you are a services company and you are selling the time of other people, you've got this huge issue that um, ours is like milk. And at some point, milk sours, and you got to dump it out. Well, it's the same thing here. You can't sell last week. You can't sell last month. So how do I maximize my sales hours, and how do I manage that inventory? So we're going to be talking about that. We're also going to be talking about just in time. And I used to be a huge advocate of JIT, or just in time, and that is what we're seeing so many problems with right now with the supply chain. Is just in time assumes that I don't I don't build or buy anything till the customer buys it, because I have a process that's so under control, and it's so controllable by me, all right, that I can predict that that part will be made in China or in Vietnam. It will be put on a boat. It'll arrive in LA. It'll be put on a train, and it'll arrive in my town in 5 days or 8 days or 9 days. And so this just in time means that I only receive inventory when I absolutely need it. Well, we're going to be talking about just in time as well as just in case, because with the supply chain issues around the world and a recession, you may want to reconsider that. Okay, so I appreciate everybody who has been watching or has been listening. This is IBGR, the International Business Growth Radio Network. IBGR is our call sign. We are currently heard in 183 countries around the world. We have close to 500,000 downloads of our shows. My name is William Eastman. I'll be back tomorrow and talking operations. And next Tuesday, I'll be doing the same thing with the webinar. Thank you for listening. Thank you for watching. Have a great business week. All right. All right. You got the full dose of it.